I'm going to use the information from question 21.8 just to show you a different way to calculate the distribution of a surplus or a deficit to the respective shareholders if there's more than one category of shareholders. So just using the information that's available now on the screen, we see that the company had two sets of ordinary shareholders, A and B. The number of shares issued for A was 25,000 shares, for B 20,000 shares. The A shareholders' shares were paid up to the $1 a share, where the B shareholders were only paid called to 60 cents. So the capital was paid up to $12,000. So the total number of shares issued in this case is 45,000 shares, and remember that in a liquidation, when we distribute the surplus or the deficit between the different shareholder categories, we do it based on the number of shares issued and not on the value of the shares, so at what price they have been issued. So we look at the number of shares that has been issued. Because the ordinary B shareholders have not, their shares weren't called up to the full issue price of $1 a share, it means that there's a further $8,000 available should there be a deficit where the shareholders have to contribute to the deficit. So a further $8,000 that the liquidator can call up from those shareholders. Now, when we do the allocation, we do it on the basis, on the theoretical figure of all the shares being fully paid up, in order not to be to the disadvantage of the shareholders that have already paid the full issue price for their shares. So theoretically, the capital, if all the shares were fully paid up, would have been $25,000 and $20,000, giving us a total of $45,000. Now, in this question from the liquidation general ledger account, once we've recorded all the liquidation journals regarding the transfer of the assets and liabilities, the proceeds from selling those assets, raising any unrecorded liabilities, we get to the stage where we calculate the surplus that's available to the capital contributors or the loss as a result of the liquidation. Now, in this question, at that stage, we saw that there's a surplus of $19,600 that is available for distribution to the shareholders. And you can just refer back to the question to see where that figure came from. So theoretically, we would have distributed to the shareholders $64,600 based on the capital contribution at the full issue price of the shares, as well as then adding the surplus as that was left after all the creditors have been settled. As I mentioned, this return to the shareholders is based then on the numbers of shares issued and not taking into consideration the value of the shares. So the allocation is done purely on the number of shares issued. So using this data, we can then go ahead and calculate a payout ratio per share. Which is 64,600 divided by the number of shares issued, giving us a factor of 1.435. And using this payout factor, we can then calculate what the different classes of shareholders will receive. So the ordinary A shareholders will receive an amount of 25,000 shares times $1.435 per share. So 35,875. Now you'll see that this amount slightly differs from the model solution. It's just because of rounding, the effect of rounding. And let's look at the B shareholders. The ordinary B shareholders will receive 20,000 shares times 1.435. That gives us an amount of 28,700. But they won't receive the full 28,700 because we have to account for the unpaid calls. So the amount on the part of the issue price that they haven't paid yet. So we just reduce this payout to them with the unpaid calls. So they'll receive 2,700 with this distribution to the capital contributors. Okay, so that's just a different approach apart from, or an alternative to do this distribution. If you struggle with the table that is included in the model solution, you can also look at a separate video where I've also looked at the return of capital to contributors, also just to discuss this concept again. If you have any further questions, you're welcome to post question on my Guru, and we'll be able to cover it in more detail for you there.